is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon until 1 p.m. Eastern Time, 877-927-6648. Now, the major trend of the Dow, especially with this being Friday, especially with at 4 o'clock, we close the weekly candle. This weekly candle, as I'm preparing my weekend edition for Monday, starts going out over the weekend, of my opening call. This is really important because that weekly chart has gone from an immediately intraday change of weekly signal from a buy mode to a sell signal on Wednesday. Thursday it went to a sell mode, and we'll see if at Friday at 4 o'clock we've got a confirmation of that with the MACD just slightly positive. The stochastic at 84% is still positive, but in this particular instance, price is the determinant of the trend. And the trend from the price action with this heavy, big, red candle is suggesting there's a really good chance that we're looking at a sell mode confirmation at the close today. So now we've got the Dow daily in a sell mode, joining the S&P, the Qs, the IWM, the New York Stock Exchange. In the weekly chart, the Dow and the S&P had been holdouts. In fact, the Dow up until Monday or Tuesday is looking like, hey, what's going on? This is no problem here. But that's not the issue, because the issue is the alternate count. I'd say it is probably going to be a G and not a G/C in the weekly chart. We had no clue, but as we got into the midweek and as it started coming down, it looked very obvious that because of all the other indexes, this Dow, which was the strongest, was starting to weaken. And as a result, now we can finally go to the monthly chart and say, hey, yeah, I know it's only mid-month, not even mid-month. But as I pointed out to Tom O'Brien when I was interviewed last night, excuse me, the high that was made in January of 26,616 had really outstanding technicals. Look at the MACD rallying. That was the widest differential between the 9-period differential and the slow stochastic, the fast stochastic and the slow. And that is so tiny. In fact, the month isn't finished, but right now, the monthly, not the weekly, but the monthly MACD is actually negative. It just crossed negative. But we've got 2 weeks ago. Anything can happen. Look at the stochastic, how low it is. But look at the vertical line. Leg F/B at 26,951, the all-time high. Like just a week ago, a week and a day. No, 2 days. Back on the 3rd of October, 26,951. We're trading at 25,171. This is really not good action. And this is suggesting that all the overbought readings are going to do a lot of wheel spinning. This is when you're on your motorbike, put into first gear, you accelerate like crazy, or let out the clutch. I'm using hands because nowadays they probably use all sorts of different things. And your wheel's spinning and you're not really going anywhere. Or you're on ice or in the sand, you put your foot down on the accelerator, the revs are going, the high engine is acting as if it should be going at 90 miles an hour, but you're standing still. And that's the problem, because if you usurp energy, it means that every single time there's a rally, like today, that's an issue. And it still says there's a chance that next week we have some kind of a rally. And it could be sharper. Maybe it comes from lower down. I'm not sure. But we're using up energy here that it's not good. So I've got that out the way. The only way that this can be saved in October, if there is a close somewhere in the 25,600 and anywhere in the 25,600s. No, I'm sorry. Didn't say 25. I mean 26,000. Anywhere in 26,000s. I'll be satisfied. I say, you know what? Now we're using up a lot of energy and going sideways. I don't mind rectangle formations. In fact, what I would do here in the weekly chart, gee, it's getting messy. I'll clean it up over the weekend. We'll have a nice clean chart on Wednesday. But these are all techniques that I've used for subscribers to my opening call. So let me just do this. Look at this. Pulling that across. And what we've got is a rectangle formation between 26,616. Yes, it went to 26,951, but I'm making the rectangle towards the January high, and I'm making the low at the 20,300s. Okay, and there's your rectangle. Not a bad deal. Go back to the February low, 22,360, on a worst case basis so far, making a rectangle formation, or maybe making a cup higher up in the 24,000 level. That would be great. But I am concerned that so many charts have monthly charts that are starting to weaken for the first time because of the last 3 days action. So wanted to get that out the way, take a little time. Let's just run these now. The Dow is up 126 at 25,179. The S&P SPX.X, S&P is up 24. I said to subscribers, I also said in the den, that if the E-mini has to be trading at 28 or 20 up 28 or more at 12:30, and that'll say good. Now we can have a pretty nice close. So far it's 12:15ish, and the E-mini is trading at up 10.50, giving back a huge chunk of the gain. It goes to a high of 27.85. It's trading 30 points down from there. Just made a cup formation with a lower low to a trough E, and now it's trying to rally again in the 2-minute. It's now got that leg D in the weekly chart, arch formation. So we'll see, maybe from here we can have a bit of a rally. But this is using up very important energy. Here we go. S&P has to break above 2,800, really 2805. And then I'll say, hey, that is really good action. A close below yesterday's low of 2710, I think, in the E-mini. What is it here? 2710 in the cash would be very negative, especially if it's in the next 2 days. The QQQ, 123, QQQ is up 2.91 at 172.54, had a high of 174.33 today. It's trading now down, and it made a leg C, maybe a trough C yesterday at 167, I think 167, just under 168. And it had a high of 187.53 back on the 1st of October. IWM, we've got to look at the IWM before we go to a break. IWM is trading, whoa, this is not good. Up 9 cents at 153.63, 173.39 was the August high, and now it is trading at 153.20 points. That's over. Well, it's not very good. I'll be right back.
Hi, folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. All right, so let's get on with this. So now what we're looking at is we're going to go to gold. Now, gold had this very big spike yesterday. And what is really interesting is to see this rectangle formation here, right there. See how long it went sideways in a perfect rectangle. I mean, just kept going right to the resistance line. It got repelled. It then went down to support, and then got propelled back again. And then yesterday, with a bunch of other things going on, it spiked above the resistance, and the resistance in the continuous contract in gold was at about 1220. Let's call it 1221. It rallies. It really rocket ships. It doesn't rally. It rocket ships all the way to 1230.0. It's giving back a little bit today with no new high. And you see this pattern here. It's like a propeller shaft. It has a wick that goes down to a low of 1167, rallies up, and then starts this whole rectangle thing. And then finally, at the end of it, you get a breakout to the upside. Then you come back and you see the price today test the rectangle breakout level. What's the low today? The low is 1219.3. So this is going to be very important because the MACD has rallied strongly. It's a tad overbought for that sudden move yesterday. The stochastic is still stuck in a range. It's had a good impetus to the upside. Now what's really needed with gold, because this is really just the first step after literally weeks and weeks, actually a couple of months of sideways action. And if you actually want to include it and go back to the left side, you could even go through the beginning of August before this breakout occurred. Now, what's really important about this is that we need to see silver. So silver to gold is down 5 at 1224. So it's 1222.4. Silver's up 4 cents. It didn't break out, but it started the move earlier. It, in fact, had a little bit of a rectangle formation. It's still within it, but it's already broken out to the upside. It's got a little bit of a head and shoulders. I don't like the very long sideways inverted head and shoulders patterns. I love the sideways cup formation, or bowl formation. The longer you can make the bowl, the better. And this is not a perfect bowl. So I'm just going to say that would have been the best look if we went, actually, if we went stretched even to the left a little bit. And then you would be building enough resistances on the left that if it was breaking to the upside, not only would that be very positive, but it would be portending higher highs and higher lows as a systemic move, not just a cyclical move, something that is really starting to propel for a much longer time. How long? Because it's a daily chart. You can't say, because it's not like that at all in the monthly chart. It's not like that at all in the weekly chart. I'm just talking about the daily. So silver is going to be very important. Silver needs to break. It really has to go into the 15s. Gosh, I've been saying that for a long time. Silver needs to be in the 15s, and then it's going to say, now we're talking about strength. And that means I have to look at the dollar and say, well, if gold is going to have that kind of strength, then the dollar needs to break under 93. It's at 95.26 right now, holding nicely, having not a bad day after yesterday's big red candle. It's up 25 cents at 95.26. No great shakes. But what is important is that within the context of the weekly chart, we're going to know within 2 weeks, I think, based on this weekly chart, if if the dollar starts to take out, it doesn't have to go much further. If it takes out 94.40, that's about 60 cents lower than this. On a weekly basis, if it goes under that, you've got yourself a Chapman wave cup and right there, an H pattern. And that H pattern says you should test the low that was made back on the 21st, the week of the 21st of September, of 93.81. The monthly chart is saying, wait a minute, is this all you can do? I mean, I'm holding here, I'm holding the fort, and I have yet to see a real reaction. And then I said, no, wait a minute, mister. If you go to the low bar that was made back in February of 88.25, and you count the number of bars, 1, 2, 3, 4, 5, 6, 7, 8 to the left, and you count the number of bars, 1, 2, 3, 4, 5, 6, 7, 8 to the right, we went above the resistance 3 months ago, and we haven't gotten to break that resistance yet, but we are holding really nice and steady. There again, 94 is kind of the monthly chart. You don't want to see a break under 94, and certainly you do want to see a break above 96 and absolutely 97, which was the high. Sorry, 96, 98 was the high. I'm not sure just quite what maybe I hit something. I didn't think so. All right. So that's the dollar acting okay today, not great. Now here comes the big issue. The TLT. I'm going to put these together. Just skipping. I'm skipping crude oil for the moment. We'll get there. But look at the TLT. It's down 3 cents at 114.84. I actually had, and then I blipped it out because I said I need to be terribly focused on some things today. I don't want to put something in play that has other obligations. If I was going to say buy the TLT at the open today, and that would have been at 114.39, it's trading right now at 114.84. One of the reasons I wanted to do that was to see whether or not I was correct in saying that at some point, if the market becomes volatile enough, you will see the money that's in the volatile, the coming down. Volatile means coming down most of the time. People never use the term on the upside. They always use it on the downside. Most of the time, people over the history of the market that I've been watching for years and years is that when markets really tank, money goes into bonds because people say, when stocks are shaky like this, I don't want any risk. I'll just go to the so-called safety of bonds. I know I'm getting a yield, and that's it. Of course, as the bonds go up, the yield comes down, but that's your capital is being preserved, and your interest rate is so small that it doesn't make such a difference, right? If that's security is what you're looking for, some kind of safety factor. Now, look at this. We're at the high of the day, 114.86. This is very nice. The MACD is starting to turn up. It's not positive yet, but it is starting to try to turn up. Histogram is still very negative. The stochastic is slowly moving up, 25.43. that weekly chart is the thing that kept me at bay. It said, huge move down to a leg E. It's a trough E this week, probably. Here you've got in the monthly chart, you've got like a hockey stick pattern, and then it breaks the low. So don't be in a rush. And not only that, I'm saying to myself, I think this is a 4 to 6 week type thing, with the market being very shaky, maybe with lower lows and lower highs. So where could it go? And now I'm saying to myself, you know what? I think that bonds, as a safety factor, instead of putting your money just on the side, the TLT could in fact go from 114.87 where it is right now into the 116.80 to 160 area. 2% capital gain, dividend. Up back, crude oil there.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So the crude oil trading down 5 cents right now. The way the MACD and stochastic are acting right now in the weekly chart, this has way more the look of a peak F in the weekly chart than a B. And all I need to do is to see a trade underneath 68.50, and then I think that's a problem. And a leg E in the monthly, and remember, I always look at the monthly, but the monthly was once upon in the hundreds, and then it was also once upon a time in the 200s. Goes down to 39 in February of 2016. Now it's trading double at 70.90. So, yep, we could have another bit of a breather, and I think that's what's saying. Oh, question about the energy. The XLE's energy, this is S&P Select Energy. Spider made a peak F top at 78 point, what was it, 78.36 on the 9th of October, trading now at 72.47. It did not break above that peak or high that was on the 25th of May at 79.42 in this recent rally. This is really interesting because that monthly chart, just like the crude oil, look at that, 101.52 back in July of, June, July of 2014. Everyone remember how that crude oil was screaming higher, and then it comes and helping the XLE, and then it tumbles down to the 50 area, rallies up to the 78s, and now it's 72. Yeah, just sideways to down, but it is sideways to down. And this is a weekly, very ugly weekly chart. Now, I wanted to go through the questions. FCX, here we go. FCX is Freeport McMoran, Moran, copper and gold, trading at 1280 down 43, made a peak D way back in March, I think it was, and that was a peak D in the weekly and the monthly, just over 20, announced at 12.80. Not looking good at all. High-grade copper, I never even looked at high-grade copper today. High-grade copper is down 3 cents, 0.03, sorry, 3 ticks. It's holding okay, but in the lower range. You really need to see it back above $2.953 to say, wow, this is now kicked in. It's almost like a new buy mode. It hasn't done that yet. It's still in the sell mode. Question here. KRE, so this is the regional banks. KRE is right there. It is the, I think it's the market vector regional banks. S&P Spider regional banks. Whoa, look at that peak D in the monthly. Oh, this is not good. Look at that candle from this week. And look at this, at 55.40, down $1.81. Please be careful. In fact, there's a whole market. I had questions for a number of traders want to say, what could we do? What could we do if we want to play some kind of a counter trend rally? Yeah, we were short the Dow at right from the very day of after the top, around about 26,790. We remained short, and the Dow itself, the target to the downside was a 200-period exponential moving average. I said if it hits 25,020, take a little bit off. And this morning I said just take a tiny little bit off as well, just as part of money management. And for traders, we had a trading position. We've got a trading position here. I'm not sure about it. It's just I said we're not going to go anywhere. We're not going to buy a whole bunch of stocks like everyone's talking now, Amazon and all this. They say, oh, this is your opportunity to grab these instruments. I'm very skeptical of that. Amazon gaps up today. It opens at 1808. It had a 2050 all-time high back in September. Plummets down to the 1690s, was it? 1685 area yesterday. And look, it's almost back, it's a 1760. This is, be careful. We're going to use a lot of energy with a lot of spurts to the upside. With the elections coming up, with all sorts of geopolitical things, I just think the upside is going to be, you got to grab profits as you can on the upside and then keep coming back to cash, grab cash, grab cash. I think that's the way to do it. And just keep your mind focused on the fact that lower lows and lower highs appears to be the scenario for now. I just wanted to emphasize that just to show you the type of thing. Yep, we do have a stock that's doing quite nicely percentage-wise. That's an individual stock. And we still do hold the United Technologies, realizing that it's given back a chunk of the gains, still up nicely, but I just want to see where it's going to be when this finally bottoms out. Will it hold enough? It's going to be a good clue. Next thing is XLI. You know, we always look at the XLI as the industrials, S&P industrials. Look at that candle. That is not good, that monthly candle. We've gone right through the 9-period moving average, right underneath the 14-period moving average. This is the first time in 4 months we've been underneath it, but that was a beautiful green candle that turned out to be the turnaround candle in July. And now it's fading, and it did not make a new all-time high. The January all-time high of 80.96 is still in play, and we're almost about to take out yesterday's low. This is not good action. And that weekly chart has just gone to a sell mode. I don't have to wait for 4 o'clock today. I can put a down arrow and say, MACD's just crossed negative. Well, it's actually unchanged, but it's about to cross negative. Stochastics at 79%, but that price, that just says it's going to take a long while to get some kind of retracement to the upside. Now let's go to this one. Next question. So that's that. That's that. Did that. Did that. Did that. Yes. Okay. What does this say? Hi, Basil. I'd be interested in the 5 rules for the VIX that you mentioned on your show of 10/11. I love your program and thank you so much for all you do. When you get a chance, send them on. I watch the VIX every day. Best regards, Celeste. Okay, thank you, Celeste. You know what I'm going to say is, yes, I'll send it to you. Look at the VIX index. We didn't get that climactic intraday. It has to be, for me, an intraday sell-off. Well, maybe once in all the years that I can think of, it happened kind of overnight. And the next thing we started screaming to the upside. But this move to the 28.94 level yesterday, right here in leg E, it's probably a peak E today. Well, we don't know. The day's young. I put in yields, Kavanaugh, China, tariffs. I just thought I'd throw everything in just to show you what it took to get to the recent high. And that's nothing like that little rate thing that happened back in February where the VIX went for, I still don't know how it went to 50.30. So this is going to be very interesting. Market's just about to turn down, negative. Dow's just about to go negative. Whoa, not good action at all. So we've been talking about for weeks and weeks and weeks. Raise cash. It's not a bad time. And even if there's some good rallies in your stocks that have held well, I would venture to say, take the opportunity. Oh, that's a D. This is a D in the. This is D, leg D in the 120. This is. Wait a minute. A, B, C. Yeah. Oh, that's what he was talking about yesterday. It is a D. I'm sorry. I thought there was a peak over there. You're absolutely correct. Yesterday I was being corrected by our Den Maven, the Chapman Wave star, who always corrects me with my notations. Yep, that is a D. It looks like a B, but it should be a D. Get rid of that E. Thank you. All right. So that says a D in the VIX index. It should be dropping sharply. It isn't. It's actually rounding. It's up 10 cents now after going to the was the low 21.17, trading now at 25.08. This is a dangerous market. I'll be right back. We want to talk about DAX, Boeing, Transportation, JP Morgan. Oh, Chris, I'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
I'm going to do this now. Probably over the weekend, I'll have a chance to do it in much greater detail. I sent out this morning a chart, the one that I always look at, that very long-term chart. And I mentioned that the Dow had gone under 25,000. It's the first time that it's nicked key support. This is why I'm kind of worried. The iShares, the Dow Jones Transportation Index made a peak F. Today should have been a pretty nice bounce, just to kind of show that the 9-period moving average in the monthly chart, which has been taken out, at least has the 14-period exponential moving average of around about 187.20 as security. No, the transports are down at 186.82 right now, having made an all-time high. Did I type it into the daily? I did. No, I didn't. I should have typed it in. An all-time high and the 209 area, and that gave a Chapman wave. Look, 209.43, week of the 14th of September, and then 209.33. That's called the Chapman wave. You remember I spoke about it a while back, just in passing. I didn't write it down, and it just slipped my mind. And that's terrible because the 209.43 level in the transports, all-time high, leg E, with a peak E confirmation the following week at 209.33, so 209.44 and 209.33 is a Chapman wave 2-bar reversal. Now you only put it in as a like a round number. You put it in as a point of note, but it starts to take a lot more impetus if it starts to pull back after that, because it said, wow, that was your signal to say, be careful. And now it's taking on all this water. The transports are taking on water. And it's broken key support in the weekly chart. This is absolutely a sell mode, horrible sell mode. It could bounce from here, but right now it's a terrible, terrible looking chart. And the monthly has gone from a leg F. Yes, it could be an alternate count F/B. I just can't see that now. The MACD's turned down significantly. The stochastics at 81% good, but turning down. Something spectacular has to happen to change this, because you've just broken, IYT has just broken key support. Yes, there's more than 2 weeks to go for the month, or 2 weeks, yeah. But that's not the issue. The issue is that candle so far is a very negative candle. So that's the reason why I'm starting to look at this and I'm saying, this could be quite a bit more than just a pullback. This could be something a lot more serious if what I'm looking at now, where the monthly charts for the first time are kicking in, if they start to be included in my analysis, rather than just saying monthly charts look good. Every time I'm here, I say monthly charts look great. Now, not so much anymore. So that's transportation. XAL. XAL is down. Oh, it's up 19 cents. It was up much more. Now it's up 19 cents. Look at that arch formation. Took out the left side low. You've got two bars in the XAL, the airline ARCA index, at 9569.19 to close above the double bottom of 97.31, 97.31 times 2. So it's trading at 95.72. You got 1 week in which to close back above it, and then it says, okay, great, you can have a little bit of a bounce, but holding down here is really negative action. Woohoo! This is an important session. I didn't realize it was be this important. JP Morgan, oh my goodness, look at that red candle. And look at that double top. Very unusual in the monthly charts. You can go through thousands. And this is one of the few times I've got something that could turn out to be a more serious top at a peak C1 and just fractionally below it. Instead of a D, we've got a peak C2 in the Chapman wave methodology. JP Morgan trading at 105.55. Good news turns into bad news at minus 162 today. Next question. Did I do Boeing? I think I did in the break. Yeah. So Boeing made that leg D in the weekly chart. I said, I'm really concerned because it's a weekly is at D. That was last week, but we already made a peak D in the daily at 394.28 on the 3rd of October. And I said, this could be it. Well, it is it, because the sell mode in the daily has gone to a sell mode in the weekly. In Boeing, BA trading down 4.94 at 353.90, and that leg C, the month, in this particular case, I have to say, the technicals are turning down, but the price is still pretty darn good in the monthly, but I'm watching this one real closely. I think I had a couple more questions. Yes. Oh, the DAX. So I'm going to go to the DEDOW. That's how I get it. This is I shouldn't have done that. This is painful to see. Look at that monthly, straight from the peak F top back in January. And you got different prices, but this is exactly what the DAX index is trading at. This is called the Dow Jones Germany Stock Index. So it's at 376. It was an all-time high back at 453 back in January, and now it's trading at 376. Not good, not good at all. So, okay, I got a bunch of those things out the way. Now I got a couple of questions coming in. Had one in the den, I think it was. How long do you wait for an index to recapture an important level before going up? Is it a certain amount of days? That is a very good question. And let me answer it this way. In the, what was the chart that I was looking at? Let's make it the Indu. Let's go to the Dow. We'll just treat this as a little experimental chart right here. So in the Dow, INDU, if I treat this as a rectangle, it can turn from a lowercase h to a lowercase m and then start the cup formation. And it's usually, if the left side flag, now wherever this stops, this candle in the weekly chart, wherever it stops, when it starts going up again, the next time it retraces, if it holds the low, if it just tags the low, but then it immediately goes back and then starts to make higher highs, that's where I always say within a shorter time frame, this would be the monthly as well. I'm just using this because it's bigger, but it would apply to the monthly, that in a shorter time frame, if you get a peak A, a peak B, peak C, and a D, it could go back toward, just right on or just above the previous flagpole. This would be called the flagpole if this is going to be it. And then you get the big test, because if it breaks out, look, the Dow couldn't hold the breakout. That's the big test. And as it was mentioned in the den, IM says, yeah, drop bucket. This is the pattern that we call the drop bucket. And the rule of the drop bucket is, it's not 100% because of that very sharp flagpole, but the rule of the drop bucket says double top, cup formation, fails at the right side shoulder. And what happens is if the lip on the left side to the base, if the rally comes back down and takes out 1/3 to 1/2 of the entire move from that lip to the base, there's a real good chance you're going to go down to the low. And that's why I said 22,300s would probably somewhere in that range might target if we close. I'll be right back. Basil Chapman.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
So, yeah, folks, stay tuned. You've got Steve coming up. You've got Dave White coming up. You've got Tom O'Brien. Great program. And my service is the opening call. Check it out over the weekend. Hopefully you'll find it profitable and beneficial. I do studies and all sorts of things that I give to subscribers. So the question here is, look, Boeing, you see all these green lines. This is the daily, this is the weekly, this is the month. You see all that cluster of resistance levels in this Chapman Wave automated projections of resistance and support lines. Let me just go through this. Just had a question about Wabash, WNC. Wabash is Wabash National Traders for Trucks, Logistics, Tariffs, and Metals. Look at this. Plummets there. Look, here's the candle. This is it. Look, there's the candle. Big gap. Down 21% on the day. 13.12, down 3.66. Look at the monthly chart. Makes a peak D in the Chapman Wave methodology and plummets to this major trend line support. If it starts to close on a monthly basis below 12, watch out, because that whole area into 10 is absolutely critical to hold. Hey, makes me kind of nervous here. So let me just do these automatic levels. I'll show you some interesting aspects to what we're looking at. Look, the Dow. INDU. Look at all the resistance. One of the reasons why I wanted to go short is I kept looking and saying, I've got a lot of resistance up here at the millennial 27,000 level. Look at that, 27,506, 27,555. So what happened? The Dow went just under 27,000 is now, but I don't see supports. There are very few support levels. The S&P, SPX. That's why I said to subscribers, just traders only. If you've got anything, you want to have a little, trade, just be careful, that's all. Now we're looking at is 2736 right now in the S&P. Look at all those resistance levels there and there. In the weekly chart, 2762, 2763. And here we are trading at 2736. We reversed that. You can go through, look at the Qs. The QQQ has a lot of resistance at the 187 to the 189 area in the daily, 186 in the weekly, and 178 in the monthly, and I'm seeing very few support levels. You got to be careful. Raise cash, keep some cash. You want to have some trades on the alongside because the VIX is so high. Make them small, make them judicious, and get out as soon as you're on. Basil Chapman, Tiger Technicians Hour, wrapping up. Stay tuned for Steve. Have a great day.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.